and then a little bit in northeast Missouri. So I work with our agents here that sell crop insurance. So I apologize in advance. I'm recovering from a cold, so my voice is a little even more nasally than usual, and my throat's a little raw, so hopefully I don't lose my voice. But you've got the books in front of you. I did some amending to my presentation after I'd sent April the book, so you've got some extra information in there, and there's a few tweaks I made in my presentation that I'll let you know about. Pretty informal, so if you have questions as we're going along, just raise your hand or shout at me, and I'll try to do my best to answer them. So I thought I'd start just with a little bit of a, kind of let you know a little bit about rain and hail in the business that we do in Iowa. So last year we wrote a little over actually almost 162,000 policies and covered almost 22 million acres. We had a total liability of almost $11 billion, brought in almost $600 million in premium and paid out about $45 million. So we had a lot of kind of small volume claims here and there throughout the state, mostly on soybeans, but overall was really a pretty good year from a loss ratio standpoint. Of those 162,000 policies we sold, about 90% of them are revenue protection. So by far the most common crop insurance policy that we write. The next would be yield protection coming in right around 4%, and then we have some other plans that we sell that comes in around 5%. So by and large, revenue protection is really the most common policy we write. If you take a look at loss ratios over the past few years, you guys sitting in the room probably know this as well as anybody. We're coming off of a kind of turbulent time from a crop insurance standpoint. The drought of 2012 kind of accelerated the typical ebb and flow we see with loss ratios over time. And we've been coming down on the revenue loss side ever since. So 15 kind of turned it around a little bit, and things have seemed to even out a little bit here after another really bumper crop in 2016. So just kind of recap how did your policy perform last year. Just wanted to really kind of recap revenue protection and how it works. More than likely, or at least hopefully everybody in the room had great yield, so probably your policy was outperformed with your actual yield, which is always a good thing. But just kind of recap, revenue protection, kind of what it does is it's using your APH yields and then establishing a price to really set a guarantee as a revenue or a dollar per acre. And then come fall time, when we have a harvest price announced, if that's higher than what the spring price was, you're going to get your guarantee recalculated based on that higher price. So revenue protection is really nice in the sense that it gives you a nice guarantee to start the year out with, and it'll recalculate so you have downward and upward price protection as well as yield protection built into your revenue plan. We had a price drop with corn this year at harvest time. It wasn't very substantial, so it did not really drive any losses. But more than likely, like I said, your guys' yields outperformed your policy from a corn standpoint. Soybeans was a little bit of a different story. Revenue protection for beans works essentially the same way. We did have a higher harvest price for soybeans, so if you had the harvest price option on your policy, recalculated with a higher guarantee at harvest time. We did see a few bean claims, mainly where we had heavy sudden death. We had a few isolated areas where a river flooded, that kind of thing. But by and large, again, not too many bean losses, and I think in this part of the world we had even less. If you look at 2017, disclaimer, I am by no stretch a meteorologist, and I don't claim to be one. But looking at the drought monitor here, southeast Iowa, we are in a little bit of an abnormally dry condition right now. The main thing that I've noticed here, if you see the red down in the southeastern corner of the U.S., the climatologists I have listened to this year kind of mentioned if that drought persists down there, there's a good chance it could work its way up here at some time throughout the growing season. And over the last month or two, that has really dissipated. So hopefully a good sign for us. But, you guys are having a lot of risks thrown at you when you're trying to grow a crop. So that's why everybody's here today to learn a little bit more about crop insurance. So right now we're in a phase of the policy where we're really discovering the price for what we call the projected price, which is going to establish your initial guarantee and is also going to be the price that your premiums are based on. So for corn, we're going to look at the the average price for the month of December. And at the end of the month, whatever that average price is from the Board of Trade is what's going to be used to calculate your guarantee. So I ran this last night. Right now we're about $3.94 for corn. If we look at beans, we're about $10.15. So we have seen a nice rally here the last couple weeks with prices. Hopefully that'll continue through February and get you guys started off with a nice guarantee. When we look at the soybean price, instead of using the December future, we're going to use the November. And so, again, same average throughout the month of February, so if you want to watch that, you sure can. If we look at the history of prices here, the green line represents the harvest prices and the blue line represents the projected prices. So you can see in 2012, with the drought, we had a major run-up in the harvest price that year, and it's been dropping ever since. So for corn, at least, the last 3 years, we've had higher projected prices and harvest prices. Beans, pretty much the same story with the exception of last year where we saw a price reversal at harvest. Okay, so we'll see. Right now, like I said, we're starting off with really stronger guarantees than we had last year. You guys hopefully had great yields, so you got a little boost on your APH this year. If we can get a little better price in there, should be a good start to 2017 from an insurance standpoint. These are not in your book. I just ran some general quotes from Lee County. You probably can't really see up there to really figure out what your cost may be, but if you do want to know, April and Denise can run quotes for you. The main thing on premiums this year, just from a very general sense, the base rates have gone up in Iowa, 5% on both corn and beans. So there is a little bit of an increase there. You may see higher premiums as well, again, because you're going to likely have more coverage going into this year. The quotes that we have in our quoter, they can run it to where you can compare with last year's if you want to see what your guarantees and premiums look like this year. Soybeans, kind of the same thing, 5% increase. We're looking at a higher price. The only thing to watch for soybean premiums is the price volatility factor. So looks like the market may think beans are a little bit overpriced right now, and if at the end of the month when we factor in volatility, it still looks that way, that could increase your premiums a little bit. So just something to watch there with soybeans. I thought it'd be good to hit a little bit on unit structure here. Just a few reminders. So really we've got three main types of unit structures that we write in Iowa. The top one is an enterprise unit. So what the enterprise unit allows you to do is take all of your all your acres of a crop in a county and you put it into one unit. When you do that, you're going to save premium, but you're also going to be putting all your risk into one pool essentially. So you get to save premium, but you're taking on more risk yourself, since you may have individual farms that could still do well or do poorly, and as long as your enterprise unit averages over your guarantee, you're not going to get paid a claim. The next unit structure we have is a basic unit. That's going to be all your crop in a county that's of the same share. So you'd have a separate basic unit for your cash rented or owned ground, a share with mom, a share with your brother. All those would be kept separate. Basic units are kind of in the middle of the road. We don't see too many basic units, but they are definitely still out there. And then the other option is an optional unit. So the optional unit is basically you're able to separate your fields by sections. And so every section will stand alone on its policy with its own guarantee, and losses will be worked as such. So the policy has more of the risk on there since you're separating it out more, and so those do come with a higher premium. No real changes in unit structure this year from a rate side, from a premium, or from a subsidy side. So just kind of a very general reminder there. This is kind of a new thing this year, and it's not in your presentation. This is something that I just put in here this morning. Maybe you've heard about it. It's called the Acreage Crop Reporting Streamline Initiative, or ACRSI for the acronym that we use in the insurance industry. So essentially what this is it's a pilot from the USDA that is driving or looking at sharing information specifically about your planted acreage between the RMA, which is the governing body of crop insurance, and the FSA. So initially, or essentially what you can do is, you can report your acreage to either source first. So you can come to your agent first, or you can go to FSA first. And in theory, when you go to the one location, that information is supposed to transmit to the other. So when you go to the other source, because in the pilot phase now, you still have to certify in both places. But in theory, when you get to the other place, the information can be there, and you can use that to either certify your acreage report or certify your acres at FSA. So we, as a company, had over a million fields that were pushed through the ACRSI system. And it wasn't exactly a smooth road. There were a lot of bumps in it, but it is kind of the beginning of the pilot phase here. So a lot of things to work on. Just know, from your standpoint, if you do want to participate in ACRSI, you can talk to April or Denise. If you want to report your acreage to them first, they've got some nice tools to allow you to do that, one of which I'll show you here in a little bit. You don't have to have the acres transmit if you don't want, so that's totally your option. But you still do have to go to both locations. Also, if you're coming to April and Denise first, you don't have to certify all your acres there, so you could go certify your crop acres and then let the FSA certify your non-insured acres, or you can certify your insured and non-insured acres at the agency. So again, totally your call. At the end of the day, once this is no longer a pilot, it becomes an actual program. Really, the intent is to make it easier for you guys. So should save you time. Essentially what you're doing is you're reporting duplicate information to both agencies. And so it should drive efficiency between both government agencies and as an end result, save you time as well. So one of the tools that we have, and we promoted it this year, and you probably completed your acreage report on this form this year, is the map-based acreage report. So we have all your fields that April and Denise can work with in our system, and they have a lot of customization options, and they can run really nice reports for you. And so if you're interested and you want to, talk to April, talk to Denise, they can prepare one of these reports for you early, give it to you ahead of planting time, and if you want to jot down your planting notes, you can do that and then give that to them after you're done planting, and they can base your crop insurance coverage off of that. So common misconception that your acres have to match at both places. So you can certify different acres with your crop insurance agent than you are at FSA. The main thing that you have to be aware of is you have to have a record to support the acres that you are certifying or reporting to your agent. And so the map-based acreage is a great way to do that. I'd encourage you to try it out if you want to. If you just take a little time to make sure that you're putting the right crops and dates on the fields, they can take that and process it, and it should make for a more efficient and hopefully easier acreage reporting process for you. Also gives you the opportunity to report your acreage based on what you actually planted. So, if you're using FSA acres, you could be over-reporting acreage and over-reporting premium. You could be under-reporting acreage and under-insuring, and it could also kind of mess with your APH a little bit as well. So, again, at the end of the day, it's totally your choice. You can do whatever you want. Just want to make you aware that you do have the option if you are interested in reporting the acres that you actually plant. Any questions so far? Okay.
How come the Rain and Hail Company was so fast in accepting of claims? They put a deadline of December the 10th.
Yes.
And I didn't file mine until January. I never got my claim.
Yes. So the claim filing timeframes have really been accentuated in the last couple of years. And the policy basically determines the time frame that you have to file a claim. And it's a little confusing, but there are several different ways to think about it. So the language says that the time to file a claim begins at the earlier of either harvest or December 10th. And December 10th is the final date written in the provisions that you can have coverage for your crop. And so if you have corn in the field after December 10th, you have to file a claim. We come and we do an appraisal, and we would pay your claim based on the appraised yield.
Even after December 10th?
No, if any claim turned in after December 10th, we can't accept.
Or you won't?
We can't. Yeah. That's not a rain hail rule, that's an RMA rule. Otherwise, if we did do it and the RMA found out, they would more than likely make you pay it back. So that's one thing. The other thing that you may run into, and we haven't had many claim years since they really clarified the rule, is what we call the 60-day rule. And so the policy again dictates that if you think you have a loss, or if you finish a unit, let's say you finish harvest of a unit and you think you have a loss, basically have 60 days to turn that in and to have us work it. And if we fall outside that window, then it could potentially jeopardize us paying the claim. And so I know we're thinking way down the road at harvest time already, but if you would just, when you're out there, especially if you're harvesting optional units, and you think you have a loss, best thing you can do is call April or Denise, and they can file a claim for you. The adjuster will follow up after you're done with harvest, and then if you have a claim or not, they can work it. But RMA is definitely tightening up the claim working procedures, so we can no longer accept late claims, and we can no longer work claims if they're outside that 60-day window. The only real exception is if like you're in the hospital, or if there's like a hurricane and you can't leave your house to go, contact your agent, something like that, kind of probably impractical. Or if the company is so burdened with claims that we can't get to it from a workload issue. But those are really the only cases where we can justify to RMA if we're paying a claim outside that 60-day window. Okay. So if we look at the changes that they made in the policy for 2017 this year, there really aren't very many. So it was a pretty light year in the way of changes. They did make a few clarifications. One of them is around what we call native sod. So native sod is a product of the most recent Farm Bill, and essentially it's a designation for ground that you're breaking out and breaking into production either for the first time, or you can never prove that it has been broken out and farmed any time in the past. Native sod only applies to acreage if it's over 5 acres. So if you're breaking out a couple acres, you don't have to worry about these native sod provisions. Or if you farm in Missouri, you're fortunate enough not to have to deal with these provisions either. Excuse me. But if you do have acreage that is certified as native sod, really what it is a reduction in benefits. So you're going to be limited to 65% of the tea yield for 4 years, and that's going to establish your guarantee. And you're also going to lose 50% of your premium. So at the end of the day, on that acreage, you're going to pay more for less coverage. And that's going to last for 4 years. After that 4 years, it's treated as normal acreage and normally insured. So you get your subsidy back and you can use your actual yields. So the change that they made around native sod for this year is it used to be a 5 acre per crop year. So in theory, if you had a 15-acre piece, you could break out 5 acres for 3 years, and you would not fall under the native sod qualification, and you wouldn't have the reduction of benefits. So RMA, sometimes they're a little slow, but they caught up with that. They made a real change. Now, native sod tracking is cumulative over crop years. So the example of that would be if you break out 4 acres this year, you can't break out more than 1 acre for the next 4 years, or you'll be over that 5-acre threshold, and native sod penalties would apply. So if you had the same 15-acre scenario, the first year you break out 5 acres, you're fine. The next year you break out 5 more. Since you're at 10 total acres now, it's going to begin to apply the reductions in benefit. So the main thing here is if you do have some new ground that you're breaking out into production for the first time, just tell April or Denise, and they can ask the right questions and kind of instruct you on where to go from there. One of the bigger clarifications that they RMA kind of put out there this year is around production reporting. And this is something that could affect you guys. So what they really clarified, it's not really new. It's something that's always been enforced, but they did make a slight change to it. It really has to do with your production records. So what they saw was, had a lot of policies with an enterprise unit but you're reporting your production on an optional unit basis. So every field or every section has its own unit when you're splitting out your production, which is very common, and we as a company always recommend doing that as well, just in case you want to go away from the enterprise unit and maybe go with optional units in the current year. So RMA through audits found that a lot of times the actual yields per unit were not matching up with what were reported. So what I mean by that is, let's say you were thinking on an enterprise unit level and you said, okay, my corn made 180, and you report that to your agent and you just put 180 on all of your units. And so RMA doesn't consider that if you did break out to optional unit is a true picture of the APH, and so they would apply penalties. Now, what they changed for this year is there's a couple options you have if you're doing this. Now, if your reporting and your records match what you're reporting on your production report, nothing to worry about. You're fine there. It's just if you're kind of reporting your average yield across all units. If you're doing that, just let April or Denise know. They'll put your policy, they'll write prorated on there. You'll keep your APH, but you will not have the option to go to an optional unit this year unless you can break your production out. So just if you are doing that, and especially if you're going to stay in the enterprise unit, it's really not a huge deal. Just let April or Denise know, and they'll mark it as prorated. If it's found in an audit that your yields don't match, then we have to assign yields, which means you receive 75% of last year's APH, and you would not have the optional unit, which that's no different. So in any year, if RMA would have found that in an audit, they would have applied the same penalty. So long story short, I guess take home, just make sure your production records are matching. If they're not matching, just let April and Denise know, and they can make sure that your production report is flagged as prorated. So does that make sense? Okay. Anybody here growing cover crops? So cover crop usage has increased in Iowa and probably other places as well pretty significantly over the last couple of years. So crop insurance has actually adapted to make that process a little bit easier. So they have actually kind of loosened the requirements around cover crops. So the key to growing a cover crop is termination. So as long as you terminate it timely and according to their rules, then it's considered a cover crop and does not affect or jeopardize the insurability of your corn or bean crop after that. So we're here in eastern Iowa. We're in the blue zone, zone number 4. So the rules here would be to terminate the cover crop at planting, but no later than emergence. So we've got the widest window to just terminate your cover crops. All terminate means in the language is just growth is ended. Whether you spray it, you can hay it, you can graze it, you can do all that. It's just you got to make sure that it's dead and it's no longer growing before you plant your crop. So hopefully the changes there are good. I think that making it more flexible will help avoid crop insurance problems and maybe make it more of an incentive to grow cover crops if it is something that you're interested in. Another part of the Farm Bill that wasn't the most fun is conservation compliance. So in 2014, they tied conservation compliance back with crop insurance. Not a big deal for most everybody, but if you are found to be out of compliance, or if you do not have a 1026 on file with the FSA office, it essentially removes subsidy from your entire policy. So it could be a very kind of expensive thing, and it may make you have to change your risk management plans for the current year. So the most important thing to think about here is having a 1026 and AD 1026 on file with the FSA. As long as you've got that, you're going to be fine. A couple other considerations: if you're forming a new entity, so if you're forming a corporation, if you're going maybe from like an individual policy to a spousal, anything like that, you have to go file your 1026, and then there's another special crop insurance form that you have to fill out to certify that you're actually in compliance. The other would be if you're a brand new insured, so you've been farming before, but you've never purchased crop insurance. Again, you have to file your 1026, and then there's an extra crop insurance form. And the third one would be a brand new farmer. So if you have somebody, whether you're a new farmer, or if you bring somebody into the operation, it's a brand new farmer, they still have to get their 1026 on file, and there's that extra crop insurance form that they'll have to sign. So again, just all things, it's always good to verify your tax ID every time you talk with April or Denise about crop insurance, and they're probably asking you the question anyway. That way, if there's something that they catch an entity change or something like that, it triggers them to make sure they have all the proper paperwork filled out so you can keep your crop insurance subsidy. If anybody's ever done a transfer of coverage, that can sometimes make the conservation compliant piece kind of difficult. All you need to know is if you do transfer of coverage, let's say you have maybe somebody that passes away after the crop is planted, you could transfer the coverage to an estate or to whoever's taking over that crop. If you do that, just know that there's an extra crop insurance form you have to complete for conservation compliance. But again, April or Denise should be able to help you through that if you're working with that. Another clarification, this comes up every now and then, is how does it work between the landlord and tenant? So if I'm a tenant and I'm renting a piece of ground, and I'm in compliance, I have my 1026 on file, but my landlord does not, as long as the ground is actually in compliance, then I can keep my subsidy, but my landlord would not keep it. And it's vice versa with the tenant. So if I'm a landlord and I'm good and I'm in compliance, but the landlord doesn't have his 1026 on file, or the tenant doesn't, then the tenant would lose his subsidy. So hopefully everybody is good to go on this. If you want to know if you are, you can ask April or Denise. They can easily look to see if you're out of compliance. Or we are also sending out messages to agents, letting them know if they have customers that are out of compliance. So if they see on that list, they'll be notifying you. Another change they made this year is around prevented planting. So part of your policy is you have prevented planting coverage just in case you cannot get in and get it planted this spring. It used to be for corn, the payment would be 60% of your crop insurance guarantee. They did throttle that back this year to 55% on corn only. Excuse me. So your soybeans are still going to be at 60%, but your corn is back to 55%. There are options available. If you want to buy up your prevented planting coverage, you can still buy 5% more or 10% more. They're very cheap and might be a good option to look at if you don't have that on your policy already. Just a few other reminders. Communication is probably the main theme about kind of the stuff in this section. So, if you're adding any ground prior to March 15th, make sure to let April or Denise know. That way they can get the crop or county added onto your policy if it's not there already. Even if it's not, if your county's already on there, they can start to build your APH databases. If you do add ground and it can't be included into an existing unit, the yields that you get will be based on the simple averages for all of your databases in that county, or potentially the county T yields, so the county yield, whichever one is higher. If you're going to use the share person's records, you can do that. Just let April and Denise know. They have to get a form completed by production reporting date, which is April 29th. Essentially, if you're going to go into a new crop sharing arrangement with somebody, you can use their yields as long as you have a bona fide share in that acreage. If you're going to use somebody else's, so if you're taking over a piece of ground, let's say, and you want to use their APH, you can do that, but you have to have shown that you had both actually. So you have to show that you helped in management of those acres, as well as actually physically helping with labor. But as long as you can prove that, sign a form, and then you can use their yields for the APH there. Another thing that's kind of important, if you're adding ground in a new county that you've never farmed before, definitely make sure April or Denise know that by March 15th. There's another form they have to file that includes your intended acres in new counties if you want prevent plant coverage. If you fail to do that, you're still going to be able to insure the ground, you just won't have any prevent plant coverage. New producers, so this is a designation for somebody that's farming or growing a crop for the first time in a county. And so basically what new producer allows is if you're new to a county, you can get basically the county T yields. So you can start off with the county yields on those. The important thing to remember with new producer is, even if let's say you raised a a crop of corn in Van Buren County and it's 20 years ago, and you don't have any records or anything, if you apply as new producer and FSA data mines and finds that you had a crop sold in your name from that county, then it could jeopardize your new producer status. So just if you do add some ground, or you're going to add a crop in a county for the first time, just think back, if there was ever a chance you raised a crop, you might want to let April or Denise know so they can handle it appropriately. Replant guidelines, good reminder as we come up to the spring here. No real major changes on replanting. Just remember that replanting